Welcome along to this new deep dive. Today we're really getting into BU's first quarter 2025 earnings.
Yeah, we've got the details from their call, and, well, the plan is to sift through it all.
Exactly. Cut through the noise, the management speak, the dense numbers, and pull out what really matters for you.
The key results, the strategic thinking, where they see things going.
Especially with their big push on AI, which seems to be, well, everywhere in this call.
It really is. This quarter gives a pretty good look at how they're doing overall and, how that AI focus is actually playing out across the business.
Okay, let's kick off with the headline numbers then. Give us the snapshot for Q1 2025.
All right, so total revenues landed at RMB 32.5 billion.
And how does that compare?
That's up 3% compared to the same quarter last year. So modest growth overall.
Right. And BU Core, that's kind of the main part of the business. Yeah.
Exactly. BU Core revenue hit RMB 25.5 billion. That showed a bit more life, up 7% year over year.
Okay, 7% for Core. So a bit better than the total. Is there like a story within that Core number?
Oh, definitely. Inside BU Core, there's a real split happening. The traditional online marketing revenue, well, that actually went down.
Down by how much?
Dropped 6% year over year, came in at RMB 16.0 billion.
So the old ad engine is sputtering a little. Where's the Core growth coming from then?
It's all about the non-online marketing revenue within Core. That part just, surged. It was up 40% year over year.
40%? Wow. What's the number?
RMB 9.4 billion. I mean, that's a huge jump and really the standout figure on the revenue side.
Okay, so that 40% growth is more than making up for the ad dip. What's driving that specifically? Is it mostly AI?
You got it. The AI cloud business is the big engine there. Right. Its revenue hit RMB 6.7 billion in Q1.
And a growth rate.
Accelerating, actually.
Yeah.
It posted a 42% year-over-year increase.
Right, so the big picture on revenue is a shift is happening. AI cloud and these other non-ad areas are powering growth, while traditional online marketing is seeing some pressure. Makes sense. What about profit?
Okay, profitability. GAAP operating income was RMB 4.5 billion.
And the non-GAAP figure, the one analysts often look at.
Non-GAAP operating income came in at RMB 5.3 billion.
Gotcha. And bottom line, net income.
Net income attributable to PU was RMB 7.7 billion.
And per share, or per ADS, rather.
Yeah, the non-GAAP diluted earnings per ADS was RMB 18.54.
Okay. Let's glance at the balance sheet. Cash position. Still strong.
Very much so. They ended March with cash equivalents, restricted cash, and short-term investments totaling RMB 142.0 billion. A huge pile.
But I thought I saw something about negative free cash flow this quarter.
You did. That's right. Free cash flow was negative RMB 8.9 billion.
Why is that?
Management pointed directly at increased investments in the AI business, so they're spending heavily there.
But net cash is still solid.
Yep, despite that outflow, their net cash position was still RMB 159.0 billion, so plenty of buffer.
And are they still buying back shares amidst all this investment?
They are. They bought back $445 million USD worth of shares just since the start of Q1.
Interesting. So heavy investment in AI, but still returning cash to shareholders. Okay, let's dig a bit deeper now. That AI cloud number, the RMB 6.7 billion, how significant is that becoming for BU Core overall?
It's becoming quite significant. It made up 26% of BU Core revenue in Q1.
And how does that compare to before?
Well, a year ago it was only 20%. So you can really see it taking up a bigger slice of the pie. Shows that strategic focus is, bearing fruit on the top line.
Okay, makes sense. Now, costs. If they're investing so much in AI, particularly cloud, costs must be going up.
Cost of revenues did climb, yeah. Up 14% year over year.
And what did they say was driving that?
Mainly the AI cloud business itself, the computing power, infrastructure, and also traffic acquisition costs. As AI cloud gets bigger, those costs naturally rise.
Okay, but then operating expenses actually decreased. How does that work?
Yeah, OpEx overall was down 3% year over year. They said this was mostly due to lower personnel costs.
Ah, okay.
Though that saving was partly offset by spending more on channel partners and promotional marketing.
And R&D, what happened there? Seems like that should be going up with all the AI talk.
Actually, no. This was interesting. R&D expenses specifically for BU Core decreased by 16% year over year. 16%
decrease. Wow. What does that represent as a percentage of revenue now?
It's now 16% of core revenue. That's down from 21% a year ago.
So cost of delivering AI cloud is up, but core R&D spending is down. What's the read-through there? Is that efficient?
Well, It could be a few things based on what they discussed. Maybe some costs previously classified as R&D are now baked into the cost of revenue for AI cloud.
Mm.
Or perhaps it reflects a more focused R&D effort now,
Mm.
targeting very specific AI advancements rather than broader exploration. Or maybe, they're just getting more efficient after years of heavy spending.
Right, maybe optimizing the spend. And you mentioned AI cloud is driving that non-online marketing growth. Is it becoming more profitable too?
Yes, they highlighted that. The non-GAAP operating margin for AI cloud keeps getting better year over year. They said it's now in the teens.
The teens. Okay. So it's scaling and becoming more profitable. That's a good sign.
Definitely. It's not just growth for growth's sake.
Fascinating. Okay, so the financials paint a clear picture. The AI pivot is real, it's growing fast, especially in the cloud, and it's starting to improve profitability. Let's switch tracks now to what management actually said about their strategy. How are they driving this AI push?
Right. Well, no surprise. Their absolute top priority is pushing the boundaries of their AI capabilities, especially their foundation models, and staying ahead of the pack.
And they've certainly been active there recently, lots of model updates.
Oh, yeah, very busy. They specifically mentioned releasing Ernie 4.5 back in March. That's their first big multimodal model, handles text, images, audio, the works.
And Ernie X1 came out then too.
Yep, Ernie X1, their first model focused on reasoning, designed for more complex tasks like advanced function calling.
But then like a month later, they already had upgrades, the turbo versions.
Exactly. In April, boom, they launched Ernie 4.5 Turbo and Ernie X1 Turbo. The key message there was better performance, but also, and this is crucial, dramatically lower pricing.
Ah, the cost angle again.
Definitely. They're really pushing these turbo models as being super cost effective, trying to win on price performance.
How do they claim they can do that? Faster, better, and cheaper usually don't go together.
They put it down to their unique setup, this end-to-end full-stack AI architecture they keep talking about.
Meaning they control everything from the chips up.
Basically, yeah, from infrastructure right up to the applications. They argue this gives them the ability to constantly tweak and optimize for both cost and performance, leading to that price leadership they claim.
And they're also making moves towards being more open. I saw something about open sourcing Ernie 4.5.
That's right. Big move. They plan to open source the Ernie 4.5 series on June 30th.
Why do that? Doesn't that give away their tech?
They frame it as a sign of confidence. The idea is it makes their tech more accessible, encourages more developers to build on it, and ultimately spurs more applications using their ecosystem.
I see. Get more people using their tools.
Exactly. And they're also adopting open standards like the Model Context Protocol or MCP, again, trying to lower the barriers for developers using their platform.
Okay, let's talk about that platform, Chenfen, their AI cloud offering. They called it industry leading. What makes it stand out, according to them?
They highlighted a few key things. One, a really broad model library. It's got their own powerful Ernie models, of course, but it also integrates lots of popular open source models and even third-party ones, gives users flexibility.
And the cost effectiveness comes up here too.
Oh, yeah. They gave the DeepSeek example, showing how they could run models like that very cheaply but still fast and handle lots of users at once. Again, it ties back to that full stack optimization advantage they believe they have.
What about the tools on Chenfan? Are they making it easier for people to actually build stuff with AI?
They're definitely focused on that. They launched a new thing called Data Builder, and they've upgraded their existing Model Builder, App Builder, and Agent Builder tools. It's all about improving that developer experience.
Can you give an example? What do these upgrades let developers do?
Well, for instance, they now have better support for building custom reasoning models using advanced techniques like RLHF and GRPO. These are ways to train models using feedback to make them better at complex tasks.
Okay.
Getting pretty technical there.
Yeah, but basically, more power to fine-tune models. They also extended this kind of fine-tuning to multimodal models and added something called one-click model distillation.
Model distillation, what's the point of that?
Think of it like making an elite version of a huge, powerful AI model. You compress it down so it's smaller, faster, and cheaper to run, but still good enough for specific jobs.
So businesses can deploy useful AI without needing, like, a supercomputer.
Exactly. It makes powerful AI more practical and affordable for more companies, democratizing it, essentially. That makes a lot of sense. Okay, so that's the infrastructure, models, tools side. What about their bread and butter business search? How's AI changing that? Because that felt like a huge focus, too.
Absolutely. They are pushing hard on the AI transformation of search. It's not just about tweaking, it's about fundamentally reimagining the user experience.
And are we seeing results from that push?
Seems so. They gave a specific stat. The percentage of mobile search result pages featuring AI-generated content shot up from 22% in January to 35% in April.
That's a pretty rapid increase in just a few months.
They called it their largest expansion so far. And it's not just text. They're actively prioritizing multimodal content.
Any more images, videos.
Exactly. Images, videos, but also these AI agents, digital humans, even live streaming content directly in the search results. The idea is to move beyond just blue links to answer more complex queries directly and match how people consume info now.
You mentioned digital humans. Weren't the numbers on those pretty wild?
Yeah, astonishing, actually. A 30-fold surge in AI-generated digital human videos from January to April across their platforms.
30-fold. People are really using these things.
Apparently so. It signals that this format is gaining traction fast.
And is all this AI stuff actually making search better for users? Did they share any metrics?
They did. According to their internal data, users who see these AI results find what they're looking for easier and faster.
Okay.
They also tend to explore more diverse topics and stick around longer, higher retention rates. So the claim is, yes, it's improving the core search experience.
And the main BU app itself, the platform for all this, is it still growing its user base?
Yep, still growing. Monthly active users, the MAU number, was up 7% year over year to 724 million in March. The underlying platform remains very strong.
Okay, so search is being heavily revamped with AI. What about other ways they're using AI, like these agents and digital humans you mentioned? Management seemed pretty bullish on those as real applications.
Very bullish. Agents in particular are emerging as a surprisingly effective monetization tool for online marketing.
Really? How so?
Over 29,000 advertisers are apparently using these AI agents daily now. And get this, the revenue generated from agents saw a 30-fold year-over-year jump.
Wow.
It now makes up 9% of their core online marketing revenue. So it's actually helping to cushion that dip we saw in the traditional ad business.
That's significant. Agents as a new ad revenue stream. What about the digital humans? Where are they being used?
Widely, it seems. A key use case is as hosts for live streaming, especially for merchants selling things.
Right.
But it's expanding beyond e-commerce. They mentioned uses in legal services, healthcare information, education. Tens of thousands are being used monthly.
And they're making them more realistic.
Yeah, they have an upgraded, hyper-realistic version coming soon. Their goal, which sounds pretty ambitious, is for these digital humans to potentially match or even beat humans in certain tasks or scenarios.
Matching humans. That's a bold claim. Okay, shifting again. What about their other major AI bet, intelligent driving? Apollo Go.
Apollo Go is definitely still a core part of the strategy. They highlighted recent progress on the international front, launching in Dubai and Abu Dhabi, expanding testing in Hong Kong.
So they're pushing beyond mainland China now. How many cities total?
Their footprint covers 15 cities globally now.
And the fleet size? Are they deploying many vehicles?
Over 1,000 fully driverless vehicles deployed around the world. They're really positioning themselves as a global leader in autonomous ride-hailing based on that scale.
Is usage picking up? Are people actually taking rides?
It seems to be accelerating quite a bit. They did about 1.4 million rides just in Q1.
1.4 million. How does that compare?
That's 75% growth year over year, and cumulative rides passed 11 million by May. So yes, usage is definitely ramping up.
Are they just focused on their own ride-hailing service? Or exploring other models?
They mentioned exploring asset-light models too. The specific example was a strategic partnership with Car Inc., the big car rental company for fully autonomous vehicle rentals.
Interesting. Renting out driverless cars.
Yeah, it suggests they're thinking broadly about how to leverage the tech, not just operating their own taxi fleet.
Okay. And one last piece on the AI strategy was something called Makeson. What's that about?
Right, Makeson. It's basically a no-code platform they launched. The idea is to let people who aren't developers, regular business users, individuals create their own AI applications easily.
So making AI building tools accessible even if you can't code.
Exactly. Another part of that democratization theme, making AI more usable for everyone.
Got it. So, okay, that's a lot of AI activity across the board. How does management wrap this all up for investors? What's the big picture outlook?
Well, they see this accelerating wave of AI adoption across all sorts of industries as a huge tailwind, especially for their AI cloud business, because everyone needs computing power and platforms to run AI.
And they think this whole AI trend expands the overall cloud market in China.
Definitely. The sheer compute power needed for AI fundamentally increases the total addressable market, the TAM, for cloud services.
And BU feels well positioned to grab a big piece of that.
That's the argument. They point to their unique strengths, that end-to-end full-stack capability, their efficient infrastructure, the comprehensive Chenfan platform with all its tools and models, and their focus on practical applications.
What about the challenges? Did they address things like the U.S. restrictions on advanced AI chips? That must be a factor.
They did acknowledge it, yeah. They didn't dismiss the impact, but they expressed confidence they can manage it.
How?
By leveraging those full-stack capabilities, being really efficient with the GPUs they do have, being flexible in choosing different types of chips, especially for inference, which is less demanding than training, and longer term, believing in the growth of domestic Chinese chip and software alternatives.
Makes sense. And competition. Lots of players are jumping into AI now.
They know they're not alone.
Yeah.
Their strategy seems to be about differentiating through integration, reimagining core products like search with AI, leveraging unique applications like agents and digital humans, and building a broader ecosystem by being more open and integrating third-party tech.
Okay. And going back to search monetization, they acknowledged the dip in traditional ads. What's the plan for making money from the new AI-driven search?
They were pretty clear it's early days. They're essentially having to rebuild how they monetize search for this new AI paradigm.
Which sounds expensive and uncertain.
It is. They explicitly said, expect notable near-term pressures on revenue and margin in the core ad business because of this investment.
Oh.
But they frame it as absolutely necessary, a required investment to unlock much bigger long-term growth, and maybe even monetize user queries that were previously hard to make money from.
Short-term pain for potential long-term gain then. What about Apollo Go's outlook? Are they expecting profitability soon?
The outlook there is for faster expansion. More cars, more cities, more rides. Management sounds confident they have a clear path to profitability as the technology matures and costs come down with scale. That low vehicle cost is key there.
Right. And finally, how does all this AI investment translate into their capital allocation? Where's the money going?
It's going heavily into AI, plain and simple. They confirmed a firm commitment to increase investment in AI throughout 2025.
Across the board.
Yeah, infrastructure, model development, autonomous driving, and that AI search transformation. It's hitting both their capital spending and their operating cash flow, reflecting how crucial they see this investment for the future.
But even with all that spending, they're still committed to buybacks.
Seems so. They reiterated the commitment to shareholder returns via accelerated share repurchases, planning to keep a similar pace this year.
So balancing major long-term AI bets with near-term shareholder returns. A tricky balancing act.
Definitely. It suggests they have confidence they can fund the future while keeping current investors reasonably happy.
Okay, we've covered a lot. The results, the AI strategy deep dive, the outlook. Let's shift gears just for a moment.
Yeah, and let's be super clear here. What follows is absolutely not financial advice. This is just us kicking around a hypothetical idea based purely on some interesting nuggets from the call. Pure speculation.
Totally. But, listening to the call, especially the Apollo Go discussion, one detail really jumped out. That stated unit cost for their purpose-built, mass-produced, Level 4 autonomous vehicle, the RT6.
The sub $30,000 number.
Exactly. Below $30,000 US per vehicle.
Which, if achievable at scale, is potentially game-changing, right? Considering the typical costs associated with L4 hardware stacks.
Absolutely. If they can genuinely roll out these fully driverless RT6 vehicles globally at that kind of cost base, well, that could completely reset the economics of autonomous ride-hailing and maybe even rental services. It might give them a cost advantage that competitors just can't match anytime soon.
Yeah, think about the impact on cost per mile calculations. A sub $30 K vehicle drastically changes the unit economics compared to, say, retrofitting existing cars or using much more expensive sensor suites.
So here's the slightly outrageous but maybe plausible thought experiment. Could you build a trade around this? Maybe a long position in BEU, specifically betting on this RT6 cost advantage being underestimated by the market.
And maybe, just maybe, pair it with a short position, perhaps against traditional car companies struggling with the EV transition and the high costs of their own autonomous programs, or even against other AV players who seem further away from that kind of low-cost integrated vehicle.
The core idea, the thesis, is that this potential RT6 cost advantage creates a powerful operational and scaling moat for BU in autonomous mobility, ride-hailing, rentals, whatever comes next, and that moat isn't fully reflected in the current valuation.
Now, obviously, huge caveats apply. Execution risk is massive. Regulatory hurdles are different everywhere. Scaling globally is incredibly complex.
Of course. But that specific cost number, if real and scalable, is the kind of detail that could underpin a really disruptive shift. It's provocative anyway.
Definitely food for thought. So just to quickly wrap up our deep dives today.
Yeah, let's recap the big themes.
Okay, BU's Q1 showed that strategic pivot in action. AI cloud is booming, non-online marketing is strong, making up for that dip in traditional ads.
We heard about rapid AI model innovation, focusing on cost and performance, plus a surprising move towards openness with things like open sourcing Ernie.
They're aggressively pushing AI into their core businesses. Search is being reimagined, and things like AI agents and digital humans are actually starting to drive revenue.
And Apollo Go, the autonomous driving unit, is scaling up rides and global presence, with that potentially game-changing low vehicle costs for the RT6 being a key talking point.
Our goal here was really just to give you a clear distillation of BU's core to their strategy, especially how AI is weaving through everything they do.
And just one last time on that trade idea, purely hypothetical, absolutely not financial advice. Do your own research.
Right. But as you process all this, especially their focus on applying AI through things like autonomous cars and digital assistants, here's something to think about.
Yeah, a final thought for you. Of all the specific AI applications BU discussed, the revamped search, the agents, digital humans, Apollo Go, which one do you think has the biggest potential to truly shake up its industry in the next, say, 1 to 3 years? Which one feels most transformative?
Something to ponder. Thanks for joining us for this deep dive.